All right, good morning. Welcome back here to Trader Minute. Great to have you aboard as we get ready to start another 100K challenge. I just wanted to go over the logistics, mentality, guidelines of a 100K challenge. Make sure we have everything that we need to know, in regards to that challenge. And so let's go out and take a look. Okay, let's start with we'll go through it by looking at the challenge guidelines. And yes, they are guidelines. I don't call them rules because changes could happen. Everyone thinks the market's this hard, fast rule environment. I don't find it to be that way. I find the market to be ever changing, ever fluid, and a place where too many rules kind of really get in the way. Are there some guidelines? Absolutely. And so we're going to call these guidelines. So for a challenge, for a 100K challenge, we begin with an account value of $3,000. Okay. In every trade we make is based using long call and long put options. If you're not familiar with calls and puts, they're very simple. You can go into the video archive, get some information on that, but they're not very complex to execute, and they're not very complex in terms of how they move and what's going on. I know we can delve into the Greeks and all the complexities there, but they're fairly simple. At the same time, they're high risk. Right? I mean, we're not playing a game here that's low risk investing. No, this is high risk gaming that we are doing with the 100K challenge. After achieving an account value of $10,000, the initial $3,000 capital is removed. Once $40,000 is achieved, $10,000 is removed. Removal of those trading funds is subject to the cash. It's not like, oh, we hit 10,000 and boom, I'm taking 3,000 out immediately. If that cash is in play or I want that cash for another position, I'll leave it in there for a time and then ultimately pull it out. Last challenge, we pulled out 4,000 instead of 3,000. And so, that is something that we generally do. Challenges generally last for 4 months. But you're going to see on challenges there's not an expiration. And that is something that, want to be able to keep that flexible based on how the challenge is going, what's going on in the market. You know what? We may do the challenge for 3 months and then, kind of throttle it back. We may go 5, 6, 7, 8. I doubt we'll go longer than that very often. But generally, most challenges around 4 months. The challenge trades are subject to happen any time that the CBOE options market is open. And that's basically the New York Stock Exchange hours. So about 9:30 Eastern time in the morning up until 4 o'clock Eastern time in the afternoon. Now, there are some options that are open before and after that. We do not make trades in those time periods. Challenge trade entries and exits will be made around trader minute signals, candlestick patterns, technical action, and the occasional spark of intuition. Just see something go. If you're looking for somewhere where every trade is based on the exact same setup and the exact same principle, and this hard, fast, stop level and profit taking level, you've come to the wrong place. You're not going to find that here. We could talk about all those things, and there's application of those things in the market, but not in terms of weekly and front month options trading. So we'll make trades based on a variety of things. And every trade we make, we talk about, hey, what's going on? What are we seeing? What are we looking at here with it? Keep in mind that as the potential reward increases, so does the risk. A 30% loss on 3,000 is considerably different than a 30% loss on a 60,000 account. Okay, and so the principle, the mentality behind the challenge is to earn the right to increase our risk. Instead of starting out with 60,000 and going and trading high risk options and taking that risk of losing big, we're going to start small and we're going to increase our risk and our reward as we do well, and so we kind of get rewarded in that way. We do not use margin. It's a $3,000 cash account. We don't use any sort of margin there in it. So those are some of the basic logistics here, with the with the challenge. Okay, so we generally making 2 to 3 trades a week, sometimes a little more, sometimes a little less, just depending on the overall market and how it's ebbing and flowing there with it. Now, keep in mind, challenge trades occasionally go to zero. You can go back and look at the history of any challenge. There are plenty of trades that go to zero. The challenge does not subscribe to many of the so-called market wisdoms bantered about on blogs and TV and other market information sources. The challenge is about seeing an opportunity and taking advantage of it. These things like, oh, well, if you have 100% gain, you got to take your gain. What does that have to do with the risk and reward? What does that have to do with anything? It's an arbitrary number based on what our entry price was, which is arbitrary. So we just don't. You're not going to hear those things from me. You're not going to see them in my trading. And the reality is, most market wisdoms have an antithesis that's a market wisdom, and so they constantly contradict each other, and not the game that I got in the market to trade for, and the game that I know many of us here on a day-to-day basis. It starts to get ingrained in our head, but for me, for the challenge environment, it's just absolutely non-applicable. All trades that are made are sent out in real time. Due to market movement, price changes, they can happen pretty quickly. Despite some recent technological improvement, no one has invented a pause button on the market, right, where I can just go and hit pause, and for 10 minutes the market stops so that everybody can go in and follow along at the exact same price. If that ever becomes available, definitely will use it. I'm not expecting to see it anytime soon. But the reality is, generally, when I'm making trades, I'm making them during a little bit of a lull, when I think the price is going to be a little bit stable. And if you go look at the history, most trades, in fact, 60% of all trades, entries and exits that I have made in 2018 have actually had better entry prices 10 minutes later and better exit prices 10 minutes later. So, occasionally the price will get a little worse. Occasionally it'll get a little better. That is just market movement. Occasionally someone will say, well, there's slippage, or use this term slippage. It's pretty much BS. We're not trading enough to actually move the market in any way, shape, or form. Back in my fund managing days, we bought way more options than what our community will jump into, and never had slippage issues. And the liquidity is a lot bigger now. Yes, we can have slippage issues with certain stocks and certain options, but generally the ones we trade, it's market movement rather than slippage. And I always love the slippage argument. And when I go make a trade and people pile in and the price gets a little bit cheaper, no one ever says slippage to me at that point. So the reality is, we're not moving the market, and not going to. And it's market movement. And so when I go make a trade, when an alert goes out, you have a decision to make. Do you want to get in at what price, right? I'm showing you what I'm getting in at. I'm showing you what I am doing. Most options that I trade, you know what, if it's 10 cents cheaper or 10 cents more expensive, that's not my make or break. I'm not getting in because the option's at 206 instead of 202, or 20 or 210 versus 205. Those in the world of options, those are arbitrary movements, and those are going to happen. So I know it always feels good when somebody always feels good when they get a better price than I do. So I always like for people to get better prices, but overall, there's going to be some that are better, some that are a little worse. All trade exits and entries and exits are sent out real time via email and text alerts, and also via Twitter. So you can get those alerts and get those. We are dealing in a world of technology, and technology is wonderful and allows us to do a lot of things. But keep in mind that occasionally technology breaks down. And one of the reasons why we make almost every trade on live video, along with sending out a Twitter, along with sending out an email, and along with sending out a text alert, is so that there are backups to technology. If text alerts don't work, the emails went through. Emails don't work, okay, the Twitter went through, right? And so the entry and exit the quantity of what we send out is backup more than anything. If you're just signed up to get text alerts and something happens and the text alert system has a delay or something like that, that is a risk. That is, a reality. And those are things we just cannot completely remove, as many of that is just not in many of those things aren't in our hands, to control. Broker trade commissions are not taken into account with the challenge due to the difference in commission charges for various brokers. Some people are getting very cheap options. Some people are getting very expensive ones. So we don't take that into account because it is different for everybody. We realize they are a reality. You see them in the trading account that we trade with live. They are a reality. We understand that, but we don't take them into account because for everybody they are different. This is an important one. Trade entries and exits suggested by our members or third parties, they're not considered. And this goes back to my fund managing days. And I had one of our investors, he called me up. He was talking about a certain stock and the merits of it and everything else. And, was urging us to go and get into it. And so I did my homework for the next few days, watched it a little bit, and I went and made the trade. And the trade went south. And I got a phone call. He was devastated. Felt horrible. Oh, man, I just made this loss not only for me, but for everybody else. It was on me. I'm the one that made the trade. I hit the button. I did my research. It was on me. But he felt absolutely horrible. And it's just the reality of the market, and the fact that it can be the greatest trade in the world. But, how would you feel if you suggested a trade for the community, the trade was made, and subsequently collapsed, through no fault of your own? Trading's hard enough when you're trading your own money in your own bubble, in your own world. It's a different game when you're trading somebody else's money. It's a different game when you're showing other people your trades. And it's a far different game when your suggestions other people are actually making. And, that is not a burden that I want on anybody in the community. And so we just, hey, look, if you send in a suggested trade or something like that, I will give you my thoughts on it and encourage you to go ahead and make it if you like it. But it will not be considered for the challenge. Okay. Keep in mind, the trades made as part of the challenge are not considered investment advice. And I don't say this because of the legalities of that, right? This is not investment. This is a trading game rather than an investment strategy. Legally, I have to disclose that some or all of the $3,000 is a possible loss in any challenge. We have had challenges go from 3,000 to zero. The last one went from 3,000 to 10,000. Okay, so, we've had challenges go to, 49,000. We've had challenges go to 20,000. We've had challenges go to zero. Those are all possible in the world of high-risk options. Okay, this is not an investing type of game. This is a trading game, and it is one where the risks are real. Okay. Upon that understanding, we also know that the gains, far outweigh the risks here when we're dealing with these types of options. And as you follow along in the challenge or trade your own challenge with that philosophy, I'll let you be the judge. But need to make sure we understand the mentality here. If challenge trades are causing you a lack of sleep, anxiety, any other life-altering mood change, please quit trading them. It's not worth it. It's a trading game, and occasionally I get this email where somebody goes, "I just made this trade and I put all this money into it. Is it going to work? Is it going to work?" I don't know. I've traded the markets long enough, and I understand the markets well enough that I know that not every trade works. I do not have that magical crystal ball that says, "Hey, this is going to happen." I can assess the fundamentals. I can assess the technicals, I can assess the risk reward, and I can go make a decision based off of those and generally have some success. But at the same time, there's nothing that's a guarantee. There's nothing that is a absolute boom, this is going to be perfect when it comes to the world of options. All right. If you're going and dealing with high anxiety over every trade tick, if you're looking at it in the morning and going, oh no, my stock's down $1, what do I do? What do I do? And you're sitting there going, okay, I got to find out for Jeff. What's he thinking? What's going on? I promise you I'm not going through the same anxiety. I promise you I'm not going through the same, the same heightened emotion. Many years of trading, I've learned to keep my emotions very much in check on the upside and on the downside. There is no value in having those emotions really high and really low. Am I bummed when a challenge goes to zero? Yes. Am I bummed when a trade doesn't work? Certainly. Do I feel kind of cool when a trade works and the challenge works? Absolutely. But driving yourself crazy over every single tick of every single trade in a challenge is a quick recipe to, just absolute insanity. And so please, if you're going through that, if you're dealing with that heavy lack of sleep, we're dealing with $3,000. That's what we're risking. If you don't have that to risk, and that's going to be life altering, the challenge isn't for you. If you have it to risk, you want to put it as part of your overall strategy, as a little bit of game with a little bit of money in your overall trading strategy, great. But it is something that, please, it's not worth the lack of sleep. It's not worth the anxiety. It's not worth trouble in your marriage or trouble with the kids. It is not worth it. If challenge trades are creating smiles, grin, combined feelings of euphoria, feel free to continue. Most of us that are trading are addicts. We're absolutely addicts when it comes to trading, and we're like moss to the flame, and we keep coming back. And occasionally we're able to master the flame, and occasionally we get burned, and we know that's part of the game. And when it comes to the challenge, that's part of the challenge. Okay. But bottom line, please use common sense. Remember, the challenge is a fun addition to any trade strategy. It's designed to increase freedom rather than create this effect of staring at a screen all day. No good really comes of that unless you're a day trader. And so it's one of those things where, have fun with it. If you're just following along with the trades, just to trade them, let them go. Enter and exit as you see. If you're looking at them to learn, great. We will continue to show what we're thinking, what we're looking at. But also keep in mind, with every trade, there's an opposite argument. That's the world of the market. We can take the most bullish stock, right? And we can make a bearish argument. We can take the most bearish stock and we can make a bullish argument. There are always arguments on both sides of the equation, so we're going to go out. We're going to find stocks that have a good risk reward where we like the setup. We're going to go make those trades, and we're going to let the chips fall where they fall. Overall, love trading the challenge. I understand not every trading day is a joyous day. Part of trading is, making hard decisions on some hard days. But at the same time, the rewards far outweigh the risks, and it is something that, myself and many others love to do. Welcome aboard. Great having you with us, and we'll talk to you later. Take care.